Yeah, man, it was such an amazing weekend too, because it was like the first time all of us got to hang out. So
Yeah. And it was a good mix too. When I came back today, somebody was asking me about it, one of the guys that works for me. And I was like, it's so interesting, about, I'd say 60% of the room was heavy into real estate, like you and I are. And then the rest of the room was guys that are, monsters in the crypto world, in their own right. And it was interesting to see the two groups come together and bounce back and forth. Hey, where's the space going? Especially, I loved at the end when we're like, where do you see the holes in what we're proposing as real estate investors, and how can we better educate you on real estate as an investing platform and really bridge the gap between the two, which is what the Whale Club is all about.
Yeah, that last 10 minutes there was so valuable, just because it was just like direct interaction. I don't know why we should have done more of that, right? It's so apparent at the end, like, oh my gosh, we actually have the potential buyers and users of these products that we're talking about right here. Let's just ask them some direct questions.
Mm-hmm. I think you and I talked offline, a lot of us are gifted real estate investors because we've just been in it so long that we forget some of the questions that you have when you're not familiar with real estate as an investing platform. For example, tax advantages, that stuff is second nature to you and I, but a lot of people don't know the ways to use real estate and the depreciation nature of it to then offset income from other sources. I think that's huge in the crypto world, or it could be a huge application in the crypto world. And then liquidity. Liquidity is always a question when it comes to real estate, even when I'm selling my existing funds to existing investors in the fiat world. Everybody wants to know, how long is my money going to be locked up? Unfortunately, with real estate, that timeline can be longer. Whereas I think the crypto crowd is more used to, you could log on in the morning and immediately pull out of whatever platform you might be in. Mm-hmm. With that said, there are different forms of crypto investing, of course, with lockup periods, but I think the average person expects for that to trade almost as fast as you would trade on the stock market. And real estate doesn't always move like that unless you're on an asset like a REIT that is designed for the public markets.
Yeah, it was just to sort of like get an insight into their psyche. They self-refer to themselves as degenerates, right? So first of all, we're dealing with high risk gamblers in a lot of cases, right? Like, they don't mind that massive amount of risk. That's just how they operate. And so we kept hearing this term, like, I don't want to lock up my money. I don't want to lock up my money. And I don't know if it was with you or if I was having this conversation with somebody else, but we have to shift that mindset from locking up their money to locking in their financial certainty, right? There's a big difference between locking it up versus locking it in. That's what we have to sort of help educate that market, the whole crypto market, on why they should lock in their cash flow, their financial certainty.
And you're nailing it right there. And that's towards the end where I was like, we just had Dan and Nick talk about these exact same concepts. Nick talking about the barbell strategy of putting old man assets versus the kind of the upside of crypto to balance out your strategy. Dan's got other ways of phrasing it with, driving down all the things that could go wrong. And so you only have upside. And that theory, while talked about, I don't think we're there yet, but we need to translate that and show, hey, real estate is a way to weight that other side of the barbell. We need to help people translate from the theory that those guys are pushing forward to the practicality and how real estate could solve that problem for you.
Mm-hmm. Well, let's back up for a second and talk a little bit about the white paper meeting we had. So, there was probably a dozen or more of us in that room Saturday morning, and we were talking about real estate tokenization. Do you mind telling us a little bit about what kind of came out of that meeting? What were some of your key takeaways there?
Sure. I think the biggest problem there is, the problems that we're discussing is, how do we take real estate and move it onto the blockchain in some way that is functional? And with that, we brainstormed all different ways that's possible. I think some of those things are closer rather than further. For example, we could see blockchain solving the issue with the chain of title for real estate. However, to get that transition to take place, I personally think it's going to take years and years, right? Your mom's a title attorney. She works with us all the time. We need to get a lot of different lawyers on board with that process. On the other end of the spectrum, you've got the tokenization of either the assets or funds that hold the assets. There are already companies doing that, and no one more poised than us here in this real estate group to be guys that start bringing that onto the chain as fast as possible. So that really drove the discussion there on Saturday morning. And there's really two parts of it, I think. Number one was, is there a way to sell individual assets? Put a house up there as an NFT and then trade that.
Yep.
And then more interesting to me was tokenizing syndications. So if we're able to build a fund like a lot of us are already doing with existing assets in it, how do we then sell those shares on the blockchain, right? So that concept is done all the time in the real world, but how do we change that proof of ownership from a piece of paper sitting on my computer, right, that I have to track manually, to coding that into the blockchain so that, for example, if you invest in one of my funds, I track your 1% ownership as in the blockchain, and then distributions are recorded accordingly. And that solves two problems, right? It could potentially in the long run start creating a secondary market and liquidity for private real estate, which is a problem that has plagued private real estate always, right? If you invest in one of my funds right now with fiat, you don't really have a way to sell your ownership stake to someone else. You'd have to meet someone on the street, say Max, you say, hey, Max, I got this ownership in Pete's funds. Would you like to buy it from me? And that trade would happen. But there is really not a developed secondary market to sell that. If we're able to put it on the blockchain, we can create that secondary market potentially where you can trade that ownership share real easily with someone that you might not even know personally, just like you would trade, BUSD or any other coin currently. So that has huge implications for the private real estate world. And then the second problem it solves is an administration burden, right? So when I go to make distributions every quarter currently, I have to go and check my ledger and do all that math manually to make sure that I am then wiring the correct amount of funds to you as an investor. That type of stuff gets all solved by the blockchain because you could program the economics of your funds into that token, right? Mm-hmm. So when I put the quarterly dollar, gross dollar amount into a bank account on October 1st at the end of the quarter, it takes a look at where those tokens are distributed and does that math automatically and distributes those funds. So there's a chance that it could significantly bring down the administration cost for guys running funds like this.
Cost and efficiency. I mean, we like to tell stories in the Whale Club. So it's like, you remember when we were in elementary school and middle school and high school, and the teachers were like, you have to do all your math on paper. Like, we want you to show all your work. And of course, we're sitting here saying, like, this is stupid. We're going to be able to use calculators and computers for the rest of our life. It's like, why would you do all this math and all this accounting on paper when you could have a computer or a machine do it for you? That's essentially what the blockchain allows us to do. It's like so much more efficient to keep track of all these things, to manage that. I mean, you're just calling it generally admin work, and it's the same thing. It's like, we went from doing it on paper to doing it on a calculator, and that's the same thing here. It's just a computer that can do all this work. We call that a smart contract in this case. It's really cool. And so, yeah, you talked about the difference between, there's like kind of two sides of this. There's the NFT side, and then there's the security token side. I don't know if you were on the call with Chainraise. Maybe you were. I think you were, actually. And we were talking about the difference between an NFT and a security token. Do you want to elaborate on that at all?
Sure. I mean, it's pretty simple. An NFT is unique. It's a unique identifier. There's only one like it, right? And so that's really useful when you go to trade an entire asset or representation of a thing. In our case, that representation would be a property, right? I can't divide a single family home and give you ownership of like the windows and the doors. That'd be ridiculous. So an NFT would most likely be the most appropriate way to show transfership of that, right? Because then we could look at your NFT and say, okay, this is the one that represents 123 Main Street, right? And it's unique to you. With tokenization, it's a lot like shares in a company, where each one is not necessarily unique from the rest, right? So if I have a company that's made up of 100% of units, you could break those into theoretically infinite amount of fractions, whether you keep it whole, 1%, 2%, or break it down from there. But each of those is not unique from the other, right? So in the terms of a fund, when I'm trying to distribute capital, as far as profit goes, I'm just looking across that balance sheet and saying, okay, what percentage belongs to each person that holds X amount of coins, right? So it's not necessarily unique. So in that case, a security token is going to be the appropriate way to go as opposed to an NFT.
Mm-hmm. Yep, very well said. And then we talked about, how do we microstep this? Because you've been working on, you've got a single family rental fund. And for those who don't know, Pete, you're in the Columbus, Georgia market, and you're buying single family rentals for currently it's a 506B. Is that right?
Correct. So we got that one. And then it's probably more appropriate to talk about the 506C that's up in North Carolina. So that's luxury built short-term rentals. But yeah, basic concept is where you're buying multiple properties, moving them into one structure. So in this case, that structure is an LLC, right? So the LLC has the ownership of multiple of these assets. And theoretically, our projection is those assets will make profit, in terms of cash flow on a monthly or quarterly basis. And then, of course, when we sell the asset, theoretically, we should have more money than we did to start with. At least we should if I'm successful. Mm-hmm. So that's all housed together currently. And I do that all on the fiat side, right? So I put that project together and then I'm going out and I'm meeting investors like yourself on the street and saying, Paul, I'd love for you to invest in this property. If you'd like to invest, wire me money here, right? That's the old fashioned way of doing it. We're trying to step it to is say, okay, how do we take this structure and instead of having that move back and forth in fiat and take on that admin responsibility, why don't we just code a portion of it into security tokens, and then we'll sell those security tokens. So you talked about microstepping right there, right? What's neat about this process is we could blend the two together. We don't have to necessarily choose fiat versus blockchain. We could put it all together in one project, which is really, really neat. So I can code a certain percentage of those shares to exist in blockchain and sell them to folks on blockchain. And I could keep a certain amount of shares in fiat and continue to sell those as fiat. So it's a great way for us to micro-step the problem set and test the market with this.
Yep. It's not all or nothing. We don't need to tokenize the entire fund. We can tokenize a portion of it. And one of the things that we talked about was if you're going to tokenize a fund, well, as a real estate investor who may not be super familiar with blockchain, real estate investors aren't going to go out and buy crypto just to buy into your fund. They might, like some of them, but that's not really the market we're going after with tokenizing these funds. So what is the market? Who's the avatar that we're trying to go after here?
So I think the avatar is someone who already understands blockchain as a whole and is probably in crypto, probably doing really well in crypto, and is looking for something to get some downside risk, right? Mm-hmm. That, like you said earlier, lock in their gains. Because there's really two avatars, like you said. I think with time, more and more people will get used to this concept and jump in, exactly like we saw at the transition to people operating in, paper checks to the jump to PayPal, right? If you pitch somebody on PayPal in the early 2000s, they, number one, thought it was a ridiculous concept. Like, how could you trust and send money through the internet without it being a scam? And number two, even if they were bought onto that idea, their next question was, well, what do I buy? There's no such thing as e-commerce yet. Like, right. If I put my money in there, what the heck am I going to buy with it? So that's probably the best example of where we're at in terms of this particular concept. So there's really two avatars, like you said. Number one, the harder one is going to be re-educating the population on, hey, this is an avenue you could approach, right? And that's a decades-long problem that we'll solve with time, not just us, but the entire industry. The second more important one is what you mentioned, people that are inside crypto already and have no idea how to get access to private real estate and the great returns, the great safety, the great tax benefits that private real estate could offer, right? So with that is going to become a massive education piece, which is what a lot of Saturday morning was talking about, is how can the Whale Club start to share this knowledge that we have on real estate out with people in crypto, to give them just more options, right? Give them more options for their barbell to stack some assets on the reliability side.
Yeah. I'm actually pulling up, you're going to laugh at this. So just pulled up the Discord for the Whale Club. We started yesterday So some of the guys in the Wolf Den reached out and were like, hey, can I give me your Discord link? Because we've,
Yep.
I was telling you last week, we were setting up all the stuff with Collabland to bring over all the folks that are in the Wolf Den that want to learn about real estate. And I was like, yeah, that's great. I'm going to wait until after the event because I don't want to answer any questions before that. I can't deal with this. Too much going on. Well, they posted it in one of their groups, like one of the small channels. And overnight, we had 50 people join the Discord. So
awesome.
there's, it was just so eye-opening, not only to have that conversation, because what I got out of listening to, so I think we sort of figured it out in the morning. Like, if we're going to bridge this gap, it's done through education. First of all, educating real estate investors that there's $1 trillion in the crypto market right now, and they don't have a downshift button. They don't. I mean, they're not going to downshift into the US dollar, into a coin pegged to the US dollar. Not going to happen. This is not that kind of people, right? They're going to downshift at best into their macro, which is probably either like Bitcoin or ETH, right? And so it's all about education. And then you got probably one of the best questions in at the very end of the event. And you were sort of asking these crypto cowboys, what is it that would attract you to the real estate market? Like, what are you looking for in a product? And we heard all this stuff, and it made me realize, this is not a slight towards them, but they don't know anything about real estate. Like, they don't know why. They don't know. I mean, we're talking basic 101 stuff. Why should you own real estate? Yep. And we've all looked at each other kind of like, wow, we need to take a step back and build their education up over time.
And you nailed it, man. And you alluded to it at the beginning of the day, which is actually what made me come up with that conversation. You were expressing to people, hey, like, when you're teaching somebody about blockchain, don't immediately jump to the Ethereum merge. You're going to lose them off the bat because you're not speaking a common language. It works in the opposite direction too, right? Like, we are just so ingrained in real estate, we assume that people know what things like IRR is versus cash on cash versus cap rate. Each of those numbers are wildly different things, but to someone that doesn't know what we're talking about, it makes absolutely no sense. And if you don't take the time to educate them, they're going to keep going with what they know and understand and feel safe in, which is what they should do. You shouldn't invest in things you don't yet understand. So it's on us as a community, I think, to start educating people on the 101 basics of real estate. And I'll tell you what, we have the wind at our back right now, because in the US economy, I don't see anything else performing at what I'm seeing perform in real estate. Strictly from like a cash flow or dividend yield perspective. That's my opinion. That's why I am a real estate investor, because I believe in that as an asset class. But I do think we should share that knowledge with others and at least expose them to it so they can make an educated decision on how to get access to all sides of the barbell.
Exactly. So there's an education component to that, which is a revenue generating stream, right? Teaching people how to invest in real estate that don't know how to teach it. I mean, we've already got these products. It's a room full of people that had it. It's like, okay, well, can we adapt this to this new avatar? Mm-hmm. And so we have the education, of course, how to teach real estate, how to teach crypto investors the benefits of owning real estate long-term or participating in locking in their gains. By the way, it's also liquid. So if you want to take it out and be a degenerate,
that's
you can do that too.
There's products that are long-term. There's products that are short-term. And if we are able to solve the secondary market side of it, which plenty of companies are already working on, any of it becomes liquid, right? Mm-hmm. So we try to design our stuff. And generally what I see in the private real estate fund market is at least a 5-year projection, right? And if they get into their operations, they might sell it at year 2 or 3, but they're always telling their investors it's a 5-year lock. Like, that's kind of market norm for a private real estate fund or even a private real estate project. If you're just talking about, say, a single multifamily building, liquidity does not really exist in any form that I am aware of, unless you were able to point meet someone in the street or your network that'll buy that share from you. So that's what's so exciting about this side, is if we are able to create that secondary market, it does immediately become liquid and will really change the industry. The industry meaning private real estate specifically.
Mm-hmm. Yep. Interesting. So I think what we're going to do is try to get those guys and others like them onto our whale calls during the week. I mean, maybe it's just a workshopping session that we do once a month where we bring in these, I just call them, for some reason, I've always called them crypto cowboys. It's just like the guys who have, they self lovingly refer to themselves as degenerates. So I go with crypto cowboys, but like, getting feedback from the market is really what we want to do. Cause you say this all the time. I don't want to build the arc and nobody gets on it because, well, and maybe you could tell us a little bit about that process. We've been working with security token advisors and chain raise. There's a bunch of these types of vendors, and we're working to try to vet through that. But talk to us about the cost with this and maybe why it's cost prohibitive to do this below a certain value, let's say.
Sure. So this is the same problem set as anything you're going to build anywhere in life, right? So there's the technical side of it. How do I put it together? And then there is the market going to accept it, right? So I'll give you a great example. I read a phenomenal article recently about a guy who built out a tech platform in the mid 2000s for online grocery shopping, right? So for me and you today, that makes perfect sense. Like I can go on Walmart right now and have groceries delivered to my door. His product was exactly the same as what we know now, just 10 years ago, right? So
too early.
On the tech side, it worked completely fine. It was pretty cool. It was like you could virtually walk through the grocery store. That's how he thought people would accept it. And it went absolutely nowhere, right? So he gave up on the product. And then now we could see that is what the consumer prefers, right? COVID obviously put that into high speed. So you got a black swan event helping you, but we've kind of accepted that in the norm. So that is the same problem set we're faced with now. The tech makes complete sense. All these different companies I talked to, got some brilliant guys, whether it's coders or guys with great experience in the securities sector, whether that's securities in general or specific to real estate. They're incredibly impressive. I've got 100% faith that the tech is going to work. The next step is the market ready for it yet? And I think it is, right? We're seeing some bigger names like KKR is a huge investment firm. They just started tokenizing some stuff, right? That's a Blackstone competitor, basically. So we're seeing massive institutional level interest in it, right? The name companies that on Wall Street. So that gives me hope that we're moving in the right direction. It's not like we're going to be the first, but we'll certainly be one of the first 100. As soon as I get a list, I'll confirm what number slot I am. So that's it. Are we going to line up with the market? And I honestly believe after this weekend's discussion that we are right there. And I'm very, very hopeful that in the next week or two, like I was telling yourself and Steve Trang there, we should have this off the ground and decide on whether or not we're going to pull the trigger on this. We meaning my private equity company actually tokenizing one of the funds that we have.
Yeah, it's exciting. I still need to get on a call with those guys so we can try to see if we can't get that cost down a little bit for the first go,
I was avoiding your question on the cost there because, every situation is unique, right? So,
right.
When I'm on the phone with those guys, I'm deep diving into exactly what I have, exactly what I project to be building in the future. And they are aligning it very specifically to my needs, right? So we were talking about a Reg D 506C. But I know that there's options out there to build it for crowdfunding, which is a different regulation, and then as a Reg A as well. Those two tend to be even more cost prohibitive. But yeah, just shying away from numbers because it's super specific to us. I don't want to discourage.
No problem. We can stay away from the specifics of the numbers, but just in general, it is fairly cost prohibitive to do this below. I think what we decided was like, if you're not raising 10 million, like this just may not be worth it. So you're not going to go out and tokenize that one single family property you've got, that's 500 grand, 600, 700 grand. Like it doesn't make much sense to do that because the cost to set all that security up, it just doesn't make any sense.
Yeah. And you nailed it. And that's true for most real estate assets, regardless of whether you're going onto the blockchain with it. So I'll give you an idea. Just for me to stand up and register with the SEC, a single fund costs between 10 to 25K, depending on what you're trying to do. And that's just the US law side. Like you're not even touching the blockchain technology yet, right? So on the private real estate side, guys don't really go that route until they're doing much larger assets.
Yep. Cool. Well, so we came down, let's kind of summarize quickly. We are going to focus on education. We're going to focus on taking these micro steps to try to gauge interest. And, but we're also not shy to being the first. We just need to try to get a little feedback from the market. So hopefully we can get that over the next couple of weeks.
Yeah. And I'll tell you, I had breakfast with Matt Hoover, before we had our meeting on Saturday. And I said, you know what, man, not a single one of us has the answer for the way forward for real estate in blockchain, but each of us has a piece of the puzzle. And that's what's so cool about being a part of this club right now, is each of us has a unique piece of the puzzle. And as soon as we sit in a room and start brainstorming on it, the puzzle starts to come together and we get to a certain point. And what happened at the end of the day, Saturday, is we say, hey, we got a pretty complete picture of this. Let's identify what are the few things we need to move forward. And I think that's what I walked away with from this weekend.
Mm-hmm. Agreed. Good tactical stuff that we came out of. How about some of the speakers? What'd you take away? I know, we heard from Dr. Jeff Spencer, we heard from Dan, we heard from Nick, Steve. What did you hear? What did you take away from some of those speakers?
Absolutely. I mean, Dr. Jeff Spencer, anytime you're talking about human mindset, you're talking my language. I've been blessed to been around some great performance coaches over the past 10 to 12 years in my career. And he's echoing, a lot of the stuff from them and then taking it to another level, right? Because he's working with the top 1% athletes and CEOs in the world. So just an incredible overview. So I came back to my team today and I said, hey, we need to make sure that we're optimizing and then move on to maximizing, right? We don't want to pour gas on the fuel that is this business until our structure is set and we can handle it. Because if we're not set up right, we're going to fail ourselves and we're going to fail our investors. And that's what matters. And then of course, Dan Nicholson, you know me, man, I'm a real analytical type guy, and he's a human computer at the end of the day, with great jokes that nobody laughs at, but they're still funny.
Yeah. I was cracking up. My mom was actually bringing that up. She was like, you got to help Dan with his delivery. I'm like, that's the best you're going to get. Dan's it's hilarious in his own way. And I think Dan's hilarious. So
yeah, no, it's like it's just higher level humor, right?
Yeah.
And sometimes it takes me 30 to 60 seconds to put all the pieces together, and I'll end up laughing when he's on the next paragraph of his talk because I just understood what he said. But his approach and mindset to investing is incredible, and I think if most of the country heeded his advice, we could all be in a lot better place. And I hope the word continues to get out there, with the publishing of his book and stuff like that. But his messages are exactly what is going to help us bridge the gap between the real estate side and the crypto side, for all the reasons you've discussed on this call already, right? So, the stereotypical crypto guy is talking about shooting to the moon and going after those massive shots where only, maybe 3% of them work out, but those 3% make up for the 97% that didn't, and it's 10x, right? That's a tough lifestyle to live with those ups and downs, right? And, I met some great guys that it worked out for. I've also met a lot of guys that it hasn't worked out for, right? Yep. And that's kind of the danger of playing that game. On the other end of the barbell, you got, the real estate, incredibly predictable. You and I have had the discussion before. I can show you a spreadsheet of 10 single family homes in my market and reliably predict with probably a 10% margin of error what's going to happen in 10 years with that cash flow.
Sure.
And it's not because I'm smart. It's just because we've got thousands and thousands of years of people doing real estate. We kind of, as a society, figured that out. So when you hear Dan speak, he is giving phenomenal advice to take advantage of the upsides of both of those worlds while minimizing the downside, right? So from my perspective, they offset each other. I'm heavy into real estate. That'll always be my macro belief until somebody changes my mind or the environment changes, as Dr. Jeff Spencer says. I see crypto as, upside plays, right? So I'm going into crypto with money that I know I can afford to lose, right? That I know that I'm not relying on to pay the bills this month, this year, maybe even this decade. That's how I approach it, because I've listened to guys like Dan Nicholson that said, hey, weight both sides of the barbell and eliminate that downside risk.
Mm-hmm. What I find so interesting about having that was the first time everybody's been in that room to hear from those speakers specifically on this topic. And so what I found to be the most powerful, a lot of this stuff is fairly intuitive. It's not rocket science. Dan says this all the time. It's not rocket science. But there's a big difference between, we talked about espouse values versus theories in action. Dan brought that up. What you say you do and you think you do, how different is that from what you actually do? You know, that dissonance that's there. If we can close that gap, so that what we think we do and what we actually do is in line, we can get closer to the things that we want with less risk, less effort, and more options. And the other thing I want to mention is the shared language. Like you're saying things like optimize before we maximize, and we want to take micro steps, and we want to get closer over more. And the power in having a shared language is that we can communicate so much more effectively. And that is the foundation that we lay as investors, as people that come into the Whale Club. Now we have this foundation, this shared language, these shared ideas that we've all, heard of. We're now adopting in our business, and it creates this incredible sense of accountability for each other, right? So we can all support each other through that endeavor. That's the most impactful part of, and from my perspective, having everybody there to hear that is now we have all heard the same words, the same language. I was having this conversation with my in-laws and my parents, like, hey, is that a preference or is that binary? Right. Yeah. And just all these different phrases now, and we can shortcut the conversation. It's really powerful.
Agreed. Right. Because there's the theory side of it and learning the language and stuff like that. But as far as supporting each other as a community, it makes it very, very rapidly to call each other out when we see someone else potentially making a mistake in their investing career, making a mistake in their business, right? I could see you doing something in real estate and say, Paul, are you maximizing right now? Because it seems like these 3 systems in your flipping company are not optimized and you're about to wreck yourself, right? And that could happen in 30 seconds, as opposed to if we didn't have that shared language, it's going to take me either a long time to explain it, or we run the risk of relationship damage, right? If we miscommunicate on that.
That's exactly right. And you can just say a simple phrase, oh, you might be maximizing before you've optimized, oh my gosh, look at all the different things I'm trying to do all at once. I don't have unlimited resources. I need to optimize for the most important thing. Let's make sure we lock that in. Yeah. And then we move on to the next one. So cool.
I think the most used in the game, right? Or the most used one in the group right now is play your game, which I think most of us have adopted. And the guy honestly who does that the best, I think, is Steve Trang. He has always been clear, like I'm more introverted. I'm more of an analytical guy. And he just plays that game. He doesn't necessarily try to be someone he's not. And I think that kind of shows why he's been so successful.
Yeah, I agree. My mother-in-law really likes, what was it? I reserve the right to change my mind. I was like, yes, you do, Lori.
Yeah, that was a tough one. I was kind of thinking about that in terms of business agreements and stuff. I understand the concept behind it and all, but yeah, I think you need to clearly kind of articulate that to people ahead of time that might not know the language.
For sure. Yeah, it doesn't give you license to just like do whatever the hell you want at any point in time.
And that's how I think it could be misconstrued. So next time we're doing dinner plans, I'm going to just randomly change on you and say I've got the right to change my mind and just walk away to Arby's or something.
Yeah, well, there's always there are trade-offs to every decision, right? So every decision has an infinite number of trade-offs. So yes, you do have that right, but you got to recognize there's always trade-offs. So very cool, man. What else? We did a speakeasy Friday night. That was a blast. Yep. Probably stayed out a little too late.
It was interesting because that was the first time I got exposed to some of these guys in person, right? So you're diving into different business opportunities guys have. I mean, Matt Hoover apparently is building a self-storage facility. That's
so cool.
Wildly impressive, right? Sitting with a gentleman, Chris, who I'd never met before, and he was apparently formerly a commercial developer. I mean, that's really, really impressive stuff. To guys doing all sorts of stuff in the crypto space that I honestly have zero knowledge of, right? Because I'm only touching a certain aspect of crypto right now in my investing journey. So just kind of hearing the ups and downs, pros and cons, the experiences they have. I could have spent 24 hours in there just kind of getting to learn everybody.
Nice, man. Well, thanks for sharing. I'm excited to see where this goes with your fund. Obviously, we're all excited. And we're just, it feels like we're just right at the edge.
Yeah.
And
I feel like Steve
I'm
was putting me on the spot there at the end. He's like, Pete needs to get this thing off the ground.
uh
Working on it, brother. I'm working on it. But you're
yeah.
exactly right. Yeah, if you're watching this live or even the recording, like check back in pretty rapidly because we are trying to get this thing going in the next few weeks. So and I do think we need to document that journey so people could see, hey, how did it go from theory, from guys that are out there grinding, getting after it in real estate to actually getting on the blockchain and successfully raising capital, right? Because that's the goal. Successfully raise capital and then return a great investment on that capital.
Mm-hmm. Yeah, just to echo what you said, for anybody who's listening to this that is an early adopter to blockchain or wants to be an early adopter to blockchain, if you're an active real estate investor, we want you in our community. This is how we win long term. It's, like you said, Pete, it's everybody has a little piece of the puzzle that they can add. This communal effort, the momentum is building so fast. It's honestly scary. I'm like, woo, I'm going to be busy for the next 5 years. But it's so worth it because we're doing something so innovative and so, I think impactful to the world. There's got a lot of good that we're doing with this. So anyways, like I said, thank you for coming on, Pete. I appreciate all your insight as always. We'll bring you back on here in the next, couple weeks because I'm anxious to hear what you're working on too. If you guys want to learn more about any of this, you can check out blockchainwheels.com. We've got a whole bunch of free resources on there. We're going to be continuing to put all these videos out constantly. We have more content than we know what to do with. So it's just going to keep pouring in week over week. And we'll see you guys on the next one.
All right. Thanks Paul. Pete. Looking forward to seeing everybody out there.